Ladies and gentlemen, we'll now move on to the next session. Our guest of honor for the next session is Mr. K.V. Kamath. Mr. Kamath is the chairman of Geo Financial Services and the former chief of the New Development Bank of BRICS countries. Previously, he also served as the chairman of Infosys Limited and as the non-executive chairman of ICICI Bank. Mr. Kamath also served as ICICI Bank's founder and managing director and CEO from 1996 until his retirement in 2009. He was awarded the Padma Bhushan, one of India's highest civilian honors, in 2008 for his contribution to the growth of the banking sector. I invite Mr. Kamath and the delegates of IIM Kozhikode and NSE for the inaugural ceremony of the Urupika Center for Excellence. We'll have the... We'll have a bell ringing ceremony, and then we'll have a short video of Urupika, please. Yeah, we'll have a bell ringing ceremony. Yeah.
Can we play the video right after?
Yes.
Sir, you have no young.
This was sort of a small video. There is a numismatic history about the Urupika coin. It was an old Smoothry coin, Smoothry's kingdom in Calicut, which now is called Kozhikode. It was known as Urupika, and the modern rupee has sort of some lineage and history from which it grew. So that's what it was all about. Thank you.
Thank you. Our next session is a fireside chat between Mr. K.V. Kamath and Dr. Latha Venkatesh on futures of digital finance.
We spoke a lot of legacy issues, and now this is a journey into the future. The aha moment in digital finance came for me a few days back when a young person, one of my nieces actually, who works in a bank, I asked her, how much of AI do you have? And she said that I don't write letters to clients. I just go to the tool writes, and then I have to just check it. I have to put a tick to see whether it's well written. So AI was here. That was an aha moment for me, because I still write it painfully every time we invite a guest or curate a panel, a seminar. But can we start there, Mr. Kamath? What is the state of digital finance, in the sense how much of AI is already there? Selection of loans, selection of customers, or even something as mundane as writing of letters and reminders and chatbot. How much has AI already arrived?
Actually, let me put that in context. You need to understand what is the rate of change to understand how much is there and what is happening. So this is a few years back, and probably the pace has increased. Some 4-5 years back, I was talking to my old friend Vishal Sikka as to what pace is AI growing at. And he said the price performance is doubling every 3.4 months. Now, please compound it. You will what is it? It's about 10x a year, improvement in price performance. And this was a few years back. Fast forward today, I don't want to say it's now double that or whatever. I'm happy with 10x. So you can understand the rate of change that we will have to face if the price performance is increasing at that pace. So virtually anything that we are thinking of will be in a way mastered by AI in a much quicker time frame than what we think we are doing.
So if you can give us some perspective, what has already happened?
You know, as your niece said, entirely where there is a Gen AI type of activities, everything has been, in a way, is today can be mastered by AI. And don't be surprised, a lot of the regulators now use AI
Yes.
to do a whole lot of analytics on various numbers. So I would think anything that was written is already done. Any number work which needs to be played with, you got an algorithm with now much more of embedded artificial intelligence things to do things. So I'm sure it's getting to where it writes code by itself. So all you can expect is the pace will increase.
Okay, so what happens in the real world? What kind of advantages does a digitally native NBFC have over a legacy NBFC?
Let's take a very simple example. You take a bank, let's take a bank which put in technology 25 years back. How much of change would have happened in the bank? I would think at best 25% of technology would be fit for purpose today. I'm taking this as a universal thing, not India alone. 25% has been replaced, the rest is where it was. Whereas the digitally native startup today in the fintech business is current. So, this is actually live question that I asked a bank about a year back, a year and a half back. So how long will you take to replace your app? And after looking around, the guy said 18 months. I asked the same question to a fintech who also had an equally good product. They said, how long, in the financial services business, of course, how long will you take to replace this? He said 6 weeks. So looking at that sort of challenge, you know where the future is. Unless banks and legacy institutions reinvent themselves.
But how does it look at the moment to you? Banking has been special at all times. When the mobile arrived or the cell phone technology arrived, it completely uprooted. I mean, there's no sign of MTNL. There is no sign of Alcatel. The legacy was completely uprooted. But in all countries, whether it's the JPMs and the Morgan Stanleys in the US or whether it is ICICI, HDFC Banks and SBI in India, the regulator protects, or for whatever reason, the status quo is protected. So do you think there is such a danger to legacy systems, or finance will be different?
Again, if you look at, let's take just a small piece of that for India, and that will indicate what is happening. Earlier on, if you look at, you had Ka and Sa were seen as the permanent bedrock of a bank. And they were permanent, so you could lend long out of that, which actually is counterintuitive because that could be the riskiest part if it were to move. But it never moved in India. So the regulator was right. You now look at Ka, there is virtually no Ka anymore because nobody keeps any overnight balance on one side. B, all the float that you had is vanished because it's real-time settlement for everything, including the UPI part of it and the RTGS part of it. There is no float at all. So given this, the nature of business has changed, and that is forcing you to reinvent yourself. And now you have, again, look at deposit growth. This is driven by the saver. Either he is putting money into the bank or he is putting money into other instruments. And all this is being chipped away by technology. So I had the other day, I think I was just having a chat with the Honorable Minister Gadkari, and he said that my next InvIT, I want to make it retail oriented to the extent that I will pay interest monthly. So you have this possible only because of technology change, and you put an overlay of AI into that. I think the whole thing is changing at a dramatic pace.
Banking still caters to a whole, legacy population as well, older population. So can you really move into digital finance with the speed that you are saying, with the speed that technology is able to do, considering that you have to cater to perhaps the lowest common denominator? I'm sure everybody in their families would know that there is at least 25% of the family, or maybe even more, which are still FD dependent actually.
Yeah,
Not even mutual funds, FD dependent.
But that's changing pretty fast. It's changing pretty fast. You imagine that moment 4 years back when we had COVID and you couldn't go out. COVID, you said the next 2 weeks, 3 weeks you couldn't go out. Of course, then you couldn't go out for a long period of time. Just try to imagine how long it took you to actually start using that UPI app, and how long it took an older person in your home to start using that UPI app, and how long it took for that ecosystem to develop. It was virtually a few weeks to start. And then within a month or two, everybody was, not only the UPI app, I knew older people who started using Excel and started using Gmail, Sheets, because whoever was supplying you stuff said, please upload on this. And the housewife figured it out. And I'm talking of older person. So when you see merit, people change. And I had the same question going back. I can tell you, when we were rolling out ATMs, and the people in the bank asked me, who's going to use an ATM? Nobody wants to come use an ATM. And within 6 months of installation, when you save 20 minutes of standing in line to take your cash out, and here you get it in the next minute, it's a migration with no effort at all. So people are much smarter than we think, but we have to acknowledge that and provide a solution which meets that test.
Okay. Do you think that we can go entirely digital, or do you think banking will always have to be, even for that matter NBFC, banking and financial sector, has to be phygital, part physical, because you have to do due diligence perhaps with some feet on the ground, and more importantly for recovery?
I have actually a diametrically opposite view on diligence by feet on the ground.
Okay.
And that's where frauds happen. So I won't talk about frauds today, but I would think a large part of frauds happening is because of physical due diligence. You need to move it entirely to a tested and safe environment, real time, and that's what we'll look at this one. So for example, today, everybody asks for your Aadhaar card. Everybody asks for your phone number. Do you think that is safe? To me, that is probably the riskiest way. The right way is online verification of that without any at all. And today, it's moving there. For example, if you look at your DigiLocker, the transfer from Aadhaar is faceless. It is happening online and it's happening seamlessly. So I'm sure this is being thought of and worked out by the government and by various people, but at least we need to put a stop to all and sundry asking for your Aadhaar and this credentials.
And your phone number.
You go into a hotel and these are the two things that are asked for. Actually, I'm compromised. The moment I've given out these two, I'm compromised.
All right, that's true of diligence. But what about recovery? Do you think we can have something called a digital bank at all? Because recovery will have to be physical, isn't it?
Yeah, but even...
Especially bad recoveries.
Even recovery, if you see now, if you go out and talk to the digital people, they say that almost 90% of recoveries now at retail level is through legal process of basically writing to the customer that you owe us and get money back. There is no physical recovery that is happening. So everything is moving to now a different level. It's still not optimized, but I think it is getting there.
I don't think so, sir. Many of these are reporting actually 11% NPAs, which is the 10% that they're not able to recover.
No, yeah, but they're not able to recover and that's written off. So they are not going to a physical recovery mode, but they are writing it off.
Are you really saying that banking can move so completely digital that you don't need branches at all?
Next time you are talking to a bank CEO, ask him this question as to what percentage of recovery today is physical.
No, we are in an upcycle and so people are paying But I don't think in a down cycle he will say that he won't have need
I
feet on
think
the ground.
The culture is changed. The culture has changed.
No, the culture will change for sure. But I'm just asking whether you can really have branchless NBFCs.
Yeah, branchless bank. See, what was a branch doing 25 years back? It was a full-fledged office, including your accounts were kept there. They are written by hand because you did not have any gadgets to play around.
No, all those have been digitized. I take your point on all that, but I'm still not very convinced about
the
recovery.
branch today is basically a sales point and a service point. If you can master that and put it online, why do you need it? Let's take a simple example. Do you look for a branch to have a query answered or something resolved with a Zomato or a Swiggy?
No.
If you can resolve every single thing there, including the chatbot, takes you to a level where almost everything is resolved. If there is something not resolved, then a human comes in. But I am happy to deal with the chatbot and get my things resolved rather than get to that human.
No, all that is a point I'm taking. What I'm not able to buy is that you will not need branches or physical presence of some kind for recovery of loans.
No, I think actually physical recovery is passive. Nobody is. I don't think if somebody is doing it, it can go beyond another year or so.
Okay.
This is not in the digital world. This is off.
Okay. Well, I will wait for that reality
Verify
to
that.
dawn, but
Yes.
I still see that as needed. For that matter, in India, even for the financial culture to spread, I guess physical presence is still needed up to a point.
Yeah, physical presence is needed where your digital platform is not complete and not thorough. Yes, then you cannot avoid digital.
Okay. Which is this situation, I mean, we still have
At this
many...
point, 80-90% of the institutions probably are in that situation. They are not still, they can't provide you as flawless a service as Swiggy or a Zomato.
Okay, no, I would still think that, okay, Swiggy and Zomato are delivering something else here when you're giving liability or giving loans to a company, the situation is a little different from delivering food, which is an end product. A loan is, stands in a different situation. Okay, so let me come to the regulator, since you even touched on that point. How much do you think has RegTech and supervisory technology, RegTech and SupTech evolved? Do you think that has become, something that you don't have to visit the branch at all? That's completely evolved.
Who doesn't have to visit the branch?
The supervisor or the regulator?
No, I don't think the branch. I think it is probably gone off. I'm not in a bank anymore, so I do not know at the physical level what happened. But I would imagine at the branch level that went off quite some time back. But at the head office level, I'm sure there are visits. But my own view is that given the pace of change, and once the systems fall in place, that should also be done by remote.
Okay. Have you already seen signs that regulators are able to, now the RBI, for instance, has the Krill C, where defaults are anyway reported every Friday. And they have, big data. They have enough data from banks on a weekly and fortnightly basis. So already, I guess supervisory visits are not needed.
It's progressed pretty far because even without a visit, there are, they will flag items which need action immediately.
Totally based on looking at digital data. Okay. Now let me come to the other aspects of digital finance. How do you see decentralized finance evolving? It got a bit of a heart attack when the cryptocurrencies problem emerged, when Bitcoin problems emerged. But do you think that DeFi or decentralized finance has a big future in terms of trading and investment?
In any case, I'm not a big fan of crypto or this one. I think the underlying technology behind it has merit, and that will find its own course, unless something else comes which overtakes that. But the currency itself, I have no faith, because I think people have said enough about it, and I respect very much what the governor has said about it, and that's exactly my view.
Okay, so let's then come to cross-border flows itself. Do you see that? I mean, we just saw UPI being inaugurated in Nepal and in Sri Lanka. Are you expecting that we are going to see a lot of cross-border flows digitally and through systems like UPI? Or do you think it will still be dollar-based and not move away from the dollar?
See, again, if you look at the history, and I'm not going into the history of what has happened with a currency or another currency, but frankly, if you look at a cross-border transaction, there was no other way to settle but using a hard currency and using a particular platform. The SWIFT was your platform and the hard currency was the dollar. And we did not have anything else, nor did anybody else have anything else.
Option.
So now with the UPI type technologies being developed, more than one countries, and we taking it out to other countries, there is a means by which we can settle A. And now, flip side is, do you have a currency with which you can settle? I think that is to be understood and probably calibrated a little more, because you need two counterparties who are willing to settle in that currency. But the payment rails, I think, are already in place. So you are almost getting there. But I'm sure you will find counterparties who will be willing to settle with our own currency.
No, at the moment, UPI across countries is doing exactly what card payments have been doing across countries. You tap a card, instead you will use UPI in those countries that have accepted or have the interface with the UPI platform. I want to move to the next question, actually. Do you see central bank digital currencies evolving? Do you see...
I want to answer that, maybe clarify what I said and what you
about
said on card.
UPI payment.
It's not just card. You now have a payment rail.
Yes.
You have a payment rail which can go from bank to bank. From not a bank in India to a bank in India, but a bank in India to any bank.
Yes.
So earlier on, the only way you could do that was through the SWIFT exchange, through the various routings that were there. So I would guess that there is a whole lot of evolution in terms of what has happened, and that's what I was talking about.
Yeah.
So the South now has an ability to put those rails in for transaction, but the currency has to be determined. Yes. Which currency? Sorry, your next question was?
That was what? I take your point that when I do a UPI transaction between a person here and a person in Singapore, a person here and a person in Sri Lanka, it is still dollar denominated. It would be very much like a card transaction. Now I'm asking you the next step. Do you see central bank digital currencies replacing dollar?
Central bank digital currencies will first be used domestically. And I think it's a little time before they would replace a hard currency.
Okay, but is that something you see as imminent?
If it'll ease settlements.
That would be a game changer.
It'll ease settlements, but you still need the counterparty to accept your currency. The moment that happens, yes. But we need to get to a strength where, to a position where our rupee has that strength and stability, which allows it to be used as a settlement currency by the counterparty.
Okay. Now to the what has blown on our face in terms of the negatives of, well, I don't want to call it digital finance, but it was the first major digital payment company, Paytm. What we find is that the legacy regulations, compliances are not as good in this, at least in this case, the regulator tells us that there were probably mule accounts, there were probably accounts which did not at least subscribe to the regulator standards of KYC. Do you see that as a big problem with digital finance, the problem that arose with Paytm?
Yeah, again, I don't want to talk about a company or an institution. But if you look at a larger issue here, and if I take the universe of digital startups, I've always observed that the platforms they are created is good. But whether there are bugs in the way they act and operate, I am not able to call. And their expectations of market value was again out of sync. So they have created something good. In the sandbox it has worked very well and so on. But in executing it, to try to aim at that pot of gold, what mistakes you are doing, I think only regulators in the fintech business, regulators can point out. And that is something that we will need to see as we go along. Because in trying to aim at that big payday, as it were, whether you have taken any shortcuts.
There were two steps from the regulator almost back to back. The first one happened on Paytm, and then there was this commercial credit cards against which the Reserve Bank has moved. It appears that in both cases, the Reserve Bank is worried about probably mule accounts or probably accounts about which KYC has not been done. So more generally, I'm asking you that will this be a kind of an obstacle or a hindrance, a speed breaker in the path of digitalization?
I would call
of
it
finance?
certainly a tightening up of the process, because somewhere along this line is also fraud. So if you talk to digital tech companies today, I was talking to somebody in Pune, a large player in this business, and they said our worry now is not credit risk, our worry now is fraud risk. So under the umbrella of fraud, a whole lot of things are encompassed. It's not the classical fraud that we knew, that is in connivance with the bank. Now third parties are defrauding the system and playing around with it. And now in one of the analyst reports I found, not related to the subject that you talked about, but in some other context of a credit card company, they used two phrases which are very interesting. They said rental payments and tuitions are being used as they're gaming the system using that. So if anybody is interested, please go in and figure out what are rental payments and what is tuition payments. So you'll figure out what is happening. So at every step there is a need to be cautious, and the regulator is cautious. All this, and I would believe that this particular stopping that particular payment platform was because it was being in a way misused for these sort of payments. So,
since you're so close to the event and you know these things well, do you think this has disheartened the fintech community in any fashion?
in the sense that an innovator doesn't like to have checks and balances. So here I think it's very correct that you have checks and balances. You should have understood that and complied with that. And I'm sure that community will quickly learn. They don't want to give up the good that they have done.
Okay. What is your sense, therefore, about fintechs? I'm throwing all these problems at you merely to ask you whether the legacy systems are going to be overwhelmed by this huge fintech developments, technology developments that we hear. Yeah. But what we see actually is both regulator and legacy systems actually prevailing, or at least stopping the progress.
Yeah, it is not the legacy systems that have prevailed. It is a legacy company could very easily use new platforms and not be subject to. This is behavioral issues here, and behavioral issues have to be addressed, and then I think you will be okay. It is not the legacy which is the problem.
So you don't think
the
events of the last 1 month will slow down the pace of
not at all.
fintechs or payment systems?
Look at the approach that the central bank has taken. Very sound approach, putting everything into a sandbox, testing it, making sure, double testing it, and then releasing it. Now you have somebody then gaming it to do things.
It's just that one of the most blue-eyed boys of digital finance suddenly didn't come down crashing, but was seriously brought down and tied down by the regulator.
I would think we are talking of a larger thing, the entire digital life. I think everybody needs to play by the rules that the regulator sets. Okay. Then you should have no problems.
Now, the big aha moment for us was in digitalization was Paytm, and after that UPI, back to back. What do you see as the next big aha moment in digital finance?
See, my view is that the next real big moment will be when banks embrace the digital journey to the fullest, which would mean that all their existing platforms are replaced with more nimble, more agile, more fit for purpose, which will serve their customer of today and tomorrow. And I don't see that they have an option but to do that. Question is it 1 year, 2 years, or 3 years? Beyond that, I think it's challenging to stay with your old legacy systems.
What do you see as red flags in this? I mean, cyber or hacking. What can be a big red flag?
What is the young people that mentioned to me? They are no longer worried about credit risk. They are worried about fraud risk. Okay. Along with that, cyber security. So these would be the top two risks anybody will have to bear, not just banks or anybody in business will have to look at these as the number one, I would say number one risk.
Okay. So now 5 years down the line, can you tell us how an NBFC will look? How will a bank look in India?
Yeah, my hope is that they look, the very thin stuff, very thick overlay of technology, institutions which virtually run with technology rather than with the people.
Okay, so fewer employees, that's not sounding very good, but the rest of it is...
But Latha, look at it this way. This we have seen. It is not that we have not seen. See, when we started looking at branches, there were about 30, 40 people in a branch. Then it thinned down to about 15 people in a branch. And people moved to a back office. I'm talking of circa 2001, 2002. And maybe we were the pioneers in moving the back offices.
Yes.
And we thought at that point of time that we will need a very large back office in the 4 zones in India. And we set up one in Hyderabad, 2.5 lakh square feet, to seat 25,000 people at one go. And we said similar one in the west in Ahmedabad and the north and the east. We set up the Hyderabad one. By then we went straight through. We didn't need that space at all, because that's being used as a training and other things, I think, but not as a back office. So that went off. The whole equation went off. So it's getting leaner and leaner and leaner already as we see, because you have to look at the size of the bank then and the size of the bank now, and probably the size has increased 10x and the staffing has probably increased 1 or 2x.
Okay.
So you're already seeing that, and you know, even AI, the pace that it is changing, and other technologies that are changing at the same pace, it won't be zero staff, but it will be a very lean staff compared to the size of the book.
Okay, that's not very encouraging from a country that is going to harvest its demographic dividend. But nevertheless, as you point out, that's the way things are headed.
Yeah, but it's not just banking. There will be other jobs which will come up. The very act of creation, the very act that there is a digital economy, that's where the jobs are.
Thank you very much, Mr. Kamath. That's very encouraging to think that digital finance is on a super plane, and we are going to see dramatic shifts in the way banking is done and in the way non-bank
Indeed.
finance companies will
Indeed.
be held.
Thank you.
Can you tell us anything about how geofinance will look? I know you told me to keep that question away.
No, that is for the CEO to answer. I am transgressing on his prerogative. Thank you.
Thank you, sir. Do we have any question in the audience? There's a question.
It's really pleasure to have Kundapur Vishwanath Kamath talking, a fireside chat with Dr. Latha. What Dr. Kamath spoke about his heart, because I come from a district from Karnataka, which is known as the cradle of banking. 30% of nationalized bank took birth in this particular district, which Kamath sir too come from, and he revolutionized the entire banking sector. And I think this August gathering must stand up and give a standing ovation to Kamath sir. Please stand up. Sir, you rightly said that recovery is really done 98% without the people. It is practical, Lathaji. You go to Hyderabad. There's a company which has very linear staff, and they have done 98% recovery at NBFC. I am also part of NBFC for the last 18 years. I run 19 non-government organization which does impossible job with the blessing of Kamath sir. So what I'm saying that sir is a revolutionary. So we need to follow him. Thank you.
I'll just say this, sir. I was wondering. I knew that you were from somewhere near about where I was born, because you actually took my dad's name. Thank you.
There's a question.
Hello. Hi, my name is Alpana. Good evening. Beautiful talk. So I have two questions. One is on the, you spoke about the layer getting thinner on the stuff and, technology will take the role. So on the blockchain side, what are your views on how exactly it will go ahead? And at geofinance, on the governance side, what are the initiatives and how exactly do you see the future? Thank you.
Yeah, actually, the blockchain, I think, is something that we will watch very carefully going forward. Except, as I said, could there be something which overtakes blockchain at significantly lower cost, as it were? So that could be. Geo, I won't talk about. As I said, it's the CEO's prerogative. Thank you.
Good evening, sir. It's a pleasure to see you and speak to you. My name is Gopen Gupta. I'm an entrepreneur, and I should say that banking and finance is a backbone of an economy, of any country. My main point is, in a country like India, compared to China, you can see that in tier 3-4 cities, towns, smaller cities, towns, and even rural areas, you don't have banking penetrating. So do we hope that digital finance should be, where 70-80% of the people, they have so much of huge money in cash. So they should be very productive in driving the change, and they should be accelerating India. And I believe there is wherein the change lies. Thank you, sir.
I 100% agree with you, because that part is, again, almost virtually impossible to put branches into that part of India. There will be still, 300,000, 400,000 villages where you may not be able to put in. So it is digital which will overcome this challenge. You're right.
Thank you, sir.
Okay, so we have come to the end of today's wonderful conference. I invite Dr. Sagar to come on stage and felicitate Mr. Kamath and Dr. Latha. So a quick vote of thanks.
So I'm not going to hold anyone back, but I have to give this vote of thanks. So here it is. Ladies and gentlemen, as we draw the curtains on this enlightening and insightful conference, I know everybody will agree with me with this. It is my privilege and honor to extend a heartfelt vote of thanks to each and every one of you who has contributed to the success of this event. First and foremost, I extend my deepest gratitude to our distinguished speakers, panelists, and presenters whose expertise and insights have illuminated the complex issues and at the intersection of global finance. Your thought-provoking presentations, engaging discussions have enriched our understanding and inspired us to delve deeper into the challenges and opportunities that lie ahead. I would also like to express my sincere appreciation to the IIM Kozhikode faculty, especially to Dr. Mudal Sagar, for meticulous planning, tireless efforts and unwavering dedication in bringing this conference to fruition. We are very privileged to host Urupika's inaugural conference here at NSE. We look forward to hosting more conferences with IIM Kozhikode. I'm also very grateful to the cooperation we receive from our colleagues at NSE, particularly the EPR group, Purre. Yeah. Your commitment to excellence and attention to detail have ensured every aspect of this event has been executed flawlessly. I thank our Managing Director, Shri Ashish Chauhan, for his support and guidance. Last, but certainly not the least, my heartfelt thanks to each one of you, our participants and attendees, here and online, for their active engagement, thoughtful contributions, and enthusiastic participation throughout the conference. Once again, thank you everyone. Thank you.